Fool, where we discuss about DIY momentum investing. And today, like now is the middle of October, so we are done with this time's rebalancing. So that will be the focus of this video. I'll try to keep it short. If you are viewing our channel for the first time, then we have been tracking this experimental portfolio comprised of the top 20 stocks in terms of momentum from the Nifty 500 universe, and we have been doing this for almost 10 months. If you want to be a part of this journey for learning and for exploration, then please feel free to subscribe to this channel, and let's move forward. Before going ahead, I'll just put that familiar disclaimer again that none of this should be construed as financial advice, so please do your own due diligence before investing. Everything is just for educational purpose only, even though I'm myself invested in all of these stocks. Okay, so where we are in terms of the market overall is not going anywhere. Nifty is there or thereabouts, portfolios are also there or thereabouts. We have lost some of the gains from the top, but in terms of our core momentum portfolio, the portfolio that we are talking about today, we are 0.7% away from the all-time high, which is not too bad. And we can look at the trajectory also here. So this is updated till yesterday. So you can see the alpha had completely been erased in this like during this July-August time period, post elections, post budget, everything. So after that, we have again managed to eke out an alpha, and let's see how long we sustain with this. We had quite a dramatic decline few sessions ago and a couple of weeks ago around, and then we have bounced back from there. In terms of the overall market, probably they're waiting for some cues with maybe on global factors, maybe the Middle Eastern crisis or the US elections or the Fed rate cycles, how they're going to pan out. So market and also market has given quite a bit of run up, at least this year and the previous year as well. So it might be taking a bit of a breather, some sort of consolidation might be due. In terms of our alpha, so the pre-tax alpha is around 14%, and the post-tax and transactions cost alpha compared to our benchmark index of Nifty 500, that is around 7.9% for this. I just realized that like around 1 month later, we would be this portfolio would be 1 year old, right? So we'll be completing our 1 year old journey. After that, we'll also start tracking the CAGR of the portfolio. So in terms of the changes in the portfolio this time around, we have 3 exits, all are large caps, and we have 3 entries. 2 of these are mid and 1 is a small cap. The large cap allocation has been, so currently it's around 52%, and it's come close to 50% for the first time since June. So after June, when again like the post-election, post-budget era, the exposure to large caps had increased a bit. Maybe money was moving towards safety a little bit, and maybe now some of the risk on trades have come back again with the Fed rate easing cycle, and probably the RBI is also going to follow suit. So liquidity is not going to be a concern from the SIP inflows point of view. Also, they tend to remain very sticky, right? So as long as liquidity remains in the market may not correct quite a bit, and every small correction may get bought into, right? So there could be a time wise like correction, like in terms of the market can just stay there about can just stay sideways for some bit of time, and again a rally might be there, but it depends on a lot of factors. We'll see how it goes. So let's just take a look at the exits straight away. So what are the 3 exits that we have made this time? So we have Cummins India, we have Oil India, and we have Colgate Palmolive. Cummins India is the only one which is a winner in terms of like within these 3 stocks. The others are losers, although Colpal is just has almost like broken even, right? We'll look at the charts of these stocks and also the charts of the stocks that we are entering into, but let's take a look at some of the exit metrics. So how are the exit metrics structured? So the winner percentage, is the number of stocks that are winning out of every 100 trades, let's say, right? So as I've always repeated, the winner percentage is always hovering around like 40%. So I'm kind of losing money on 60% of the stocks I buy, but the gain percentage that every winner gives is more than the loss percentage that I incur with every loser, right? So because the gain percentage is higher, even with less percentage of winners, we are able to beat the market, at least for the time period for which we have studied this portfolio. So the winner percentage has actually dipped down from 42.6% to 40.4%, and this is because there are two losers this time around and one winner, so everything affects the overall numbers. The losers percentage consequentially is up from 57.4 to around 60%. So net we are losing money on 60% of the stocks we invest into. Okay, so that is more than made up by the gains that are provided by the rest 40% stocks that win. Now average gain on every winner, so average gain is how much positive returns every winner gives. Average loss on loser is how much loss percentage does every losing stock give you, right? So average gain on winner has declined slightly from 26.2% to 26.0%, and average loss on losing stocks has also improved a bit from minus 11.0% to minus 10.6%. These are very thin margins, and gradually these metrics will kind of plateau or taper, right? They won't move around much because the number of observations will keep on increasing, and like a stock has to be really an outlier, like in terms of the gain percentage, right, or in terms of any other metric, right, to impact the average that much. So yeah, that's there. The average holding period, which is how much, like in terms of the days, how many days do we typically hold a stock after we buy it in our portfolio, that has improved a little bit again from 76.6 to 78.5 days. This metric is continuously improving for months, almost it has been improving. We had a few short exits, I guess. GRSE was a short exit. We can check it in the exits thing. Granules was short, yeah. So Granules here is exited in like 28 days. VGuard exited in 14 days. That's probably the least, right? But then you would have stocks like HAL, right, which remained for 242 days. You have Cochin Shipyard, 154 days. Even Cummins this time, right, 184 days. So there are some stocks which just remain in the portfolio because they haven't met our exit criteria. And just to remind you, our exit criteria is whenever the stock falls out of the top 50 ranks in terms of our momentum screener, then we take it out of the portfolio, or it falls 25% from the all-time high, then also we will remove it from the portfolio. Okay. In terms of sectors, pharma currently retains the largest sectoral allocation. So we had 5 pharma stocks. We haven't added any pharma stocks this time around, but it still continues to remain the largest sector, followed by consumer durables and chemicals with 2 stocks each. So let's just take a look at the portfolio and then the new entries, right? Okay, so let's just take a look at the exiting charts first. Okay, so here we are. These are the 3 stocks that we just discussed and that we have exited today. And the good thing about rebalancing now is that there is no delivery margin. So 100% of whatever you sell, you just get in your account, and the entire money is nothing is tied up in delivery margin basically, right? The entire money is free for fresh allocation, and you can just buy stocks the same day. Earlier, what used to happen is like if you do not have extra capital in like liquid funds or anything that you can leverage for this purpose, rebalancing could overflow to 2 days, right? So you sold a bunch of stocks and whatever money you got out of it, some of that is logged in delivery. So if you do not have additional capital incoming, then you would wait to buy a proportion of those stocks later. Doesn't affect either way. I mean, maybe for very large portfolios, maybe above 10 crores or something, it would impact very much, but over the long run I think things should converge. But anyway, it's a good thing that like everything is getting settled in one day, and you can just complete the entire rebalancing on one day. And if you're doing a monthly rebalancing, you can just sleep for the next 29 days. So anyway, talking about the entry and exit points for these stocks, Cummins India, we entered around mid of April, around here. So you can see the green arrows, they indicate where we entered the stock, and the red dots, they indicate where we are exiting the stock. So right after we entered Cummins, it was a very great period. We liked it a lot because the stock was going up consistently. It kept going up, going up, going up. Then this June election debacle, you can see the huge red candle. Then again from the middle of July, after the budget, again it fell by quite a bit, maybe because the capex allocation by the government was not up to the mark of how the market had expected. There was a bunch of correction, like the PSUs also kind of started saturating. The growth kind of started saturating at this point. And Cummins also started taking a break. Then it slid down, it recovered, and then it didn't do anything really, right? It just went sideways for more than a couple of months, and gradually. So in momentum, you have to always remember that a stock doesn't have to fall a lot for it to get kicked out, right? Even if it just continues staying in the same place, but other stocks keep performing, because it's a relative ranking, right? So when other stocks keep performing, then the stock would automatically get kicked out, because its rank would continue to decrease compared to its peers, right? So Cummins India, the ranking continued to fall, and it just we exited based on yesterday's ranking. Now, one thing that I would just show you, and for those of you like who are watching this channel for the first time, we use this Momo India screener. It's a paid portal, but so you can create your own screeners there. So with the metrics that we have here, we have created this screener. So I checked the rankings and stuff on this screener, and for to get new stocks, I'll just look from the top on which new stocks, which of the stocks are not currently in my portfolio, and those are the stocks if it meets all the other criteria. Like for example, I have a high beta criteria, right? So I do not get into any stock which has a beta of more than 1.5. You can check out our previous videos for why I do that. But so for example, Anantaraj is not in my portfolio, but the beta is more than 1.5, right? So even if I have like one exit, I would not take Anantaraj. I would go to the next stock, right? So BASF India, right? BASF India, the beta is not it's less than 1.5. So I'm comfortable taking that stock into my portfolio. So anyway, so we sold these three stocks, which is Cummins Oil and Colpal, and whatever money we got from this stock, right? So we divided that equally and we allocated it to the new incoming stocks, and based on that, the units would be allocated to the new stocks. So let's go back to the slide. Yeah, so coming to the second stock, Oil India. So Cummins India, just to summarize here, it stayed on for more than 6 months, right? That's a pretty good term for a stock, and you have given it a pretty good runway to sort of show its growth, right? And from the last 2.5 months, we are seeing that it's not showing that much of a growth. It may pick up again, but for now, it's out of the portfolio. Gave us 22% gain and got kicked out because of the worst rank held criterion. So the rank tipped beyond 50. We have Oil India. Oil India, we bought it here and immediately it started going down. So you might feel that catching the top, right? It's a real risk in momentum portfolios, and sometimes when you buy something, it like the momentum score has increased suddenly a lot because the stock has gone up high. So you can see Oil India had green candles here, like huge green candles here, and we entered somewhere around here, and immediately the stock started correcting, right? So you would always feel that, did I catch the top? And that's always possible, right? In something as risky or probably as volatile as momentum. And the way momentum picks stocks, right? We are always picking stocks which are continuously going higher, right? So some stocks always have the probability of turning back right after you buy it or sometime after you buy it, right? So the stock corrected quite a bit, but again in this channel it again rose, right? So we broke even, and then we also made some profit, and then again it started going down. There is a huge global pressure on crude prices as well, and once the slide got arrested a little bit, again it went into the same territory of not doing anything. So goes up, goes down, some false breakouts, goes nowhere, right? And ultimately we had to exit it. And the third stock, which is Colpal, I anyway never had too much like expectation from Colpal, but the stock has performed really well in the recent times, right? After coming into our portfolio, it increased quite a bit, but there is some recent concerns around consumption again, and for some reason the stock has gone down. For us, reasons doesn't matter much. The trajectory matters more for us as momentum investors. Stayed for around 2 months and didn't really give any loss or gain. Of these three stocks, you have to just note that oil was out because it fell by more than 25% from the all-time high, and in the last rebalancing also it was very close, around 24 point something percent, and this time also it got kicked out anyway. So now if these three stocks are going, then I would pick the next three stocks. So BASF India is the first stock that I will pick in my portfolio, and second is Motilal Oswal. Motilal Oswal, again, the beta is more than 1.5, so I would ignore this. I would move down, and MCX is the next one. So MCX I would take from here, and the next one for so this ranking is for today, so this has already been updated after today's market session. So because I'm doing the rebalancing on 15th and I have to do all the like buying and selling on 16th, I do that as per the ranking of 15th, right? So because I have to do that in the market hours of on 16th, right? So as per the ranking on 15th, we had Techno, which was ahead of Himadri Specialty Chemical, and so I bought this stock rather than HSCL. So based on today's performance, again HSCL has gone above Techno. So these small things will keep changing the rankings, and that's why I say that do not think that something on rank 10 will perform better than something on rank 12 and all that. Like small tidbits of ranking here and there, small movements do not affect things in the long term, and you should always consider in terms of the deciles, right? So in terms of deciles, the top decile will obviously perform much better than other deciles, right? More likely to perform. So that's something. Let's just do one thing. So Cummins, let me search for Cummins. See, so Cummins, this is an interesting bit, right? So Cummins, yesterday the ranking was pretty bad, right? It was, I guess, around 65 or something, and it made sense. It met our exit criteria, so we kicked it out of the portfolio. Now today Cummins actually went up around 3.7% or something. Let me just check on. Okay, Cummins we do not have here anymore. I just forgot that for a minute. But Cummins was up around 3.5% or something like that, and because of that, the ranking again improved. So if you had done the rebalancing just today, right? So you would have retained Cummins today as well, because it is in 49th rank, and we allow the ranks to drop until 50, right? So that's just a small remark as to how like quickly like small things can also change your ranking and all. So these things are part and parcel of any relative ranking, right? Let's go to the incoming stocks. This will be the final part of the video. So we have two mid caps and one small cap. So Techno is the small cap stock, and BASF India and MCX are the mid cap stocks. So this is the second chemical sector stock in portfolio after PCBL, and these two, so chemical is now the second largest sector as well, along with consumer durable. So you can see this chart below this table, right? So you can see pharma has the highest allocation here. Next we have consumer durables here, and chemicals here, right? FMCG only one is left, Godfrey Phillips, which is a tobacco company. After we have exited Colpal. Auto also we have just one in terms of Bajaj Auto. Okay, so BASF India, the 1 year return is 220%, quite a bit. RSI is 72, so overbought, but generally momentum stocks come in this territory only. So we have seen much worse. We have taken stocks even at like 95 or 94. We do not have any guardrail or any filter in terms of RSI. So you can look at this like huge deviations here also, quite a bit of decline here, and again the stock has recovered to come to new highs. MCX 1 year return 195%, RSI is 82, And you see the market cap of BASF and MCX both are almost similar, 36,000 crores and 33,000 crores. Techno is much smaller, around 20,000 crore market cap company. 1 year return is the highest of all these three, that is 242%. RSI is 66, which looks favorable compared to the other two. And if you look here also, so Techno had reached this level and then there was some correction for more than like 1.5 months. And after 1.5 months, it has gone on, it has reattained this high and slightly broken, right? So I would still wait. I mean, I've already bought the stock, but in terms of chart, for me to have some conviction, I would still wait for it to give some further breakout and to decisively break out from this channel, right? MCX is going up, but then many stocks just keep going up like that, and once you buy it, the stocks can turn anytime also, so you have to keep that in the back of your mind. Let's take a look at how the other stocks have performed. So today was mostly a negative day. You can see these three stocks I have added, and from the price I bought it today, I have already seen some losses here. These are anyway like marginal losses. If you look at how the other stocks performed today, so the worst loser today was Trent. That doesn't happen very often actually, but given the kind of run up it has, like something or the other was expected. Most other stocks were down. In terms of sectors, let's take a look at the sectors before ending the video. So most sectors are in red, right? You can see Nifty 50, Nifty Junior, Nifty 200, 500, everything is in red. And the worst performer is auto, right? Best is realty. If we look at the last 10 days, how the stocks have performed relatively, so we have okay, I'll need to update the names here, but if you see the best performers, Power India has been the best performer in the last 10 days, and Dixon followed by Dixon. So these two stocks have like performed really well in the last 10 days. The others are just there or thereabouts, not much movement there. So yeah, that's pretty much it for today. I'm not sure how we are doing on time, but I'll just close the video here. If you have watched till here and if you like the video, then please press the like button and share it with your friends, with other people who may be interested in getting into momentum investing or just exploring momentum investing as to what it is about. And yeah, that's pretty much it. Take care and I'll see you in the next video. Have a good day. Bye bye.